Hello and welcome to MF Corner. I'm Sonal Buthra in the Mumbai studio, and today we put focus on investing in multi-asset funds. These funds allow investors to diversify their portfolios to mitigate risks, as it provides investors with a single investment that combines debt, equities, and one additional asset class, could be real estate, gold. Many investors typically prefer investing in gold when the returns in equity market remain moderated and vice versa, but right now we've seen a different phenomenon altogether as well. But to understand how beneficial these funds are and who are the investor for whom it will be more suited, of course, it's very investor specific with us for them as well. We have with us two experts joining us now, Ihab Dalwai of ICICI Prudential AMC and Vishal Dhawan of Plan Ahead Wealth Advisors. Gentlemen, thank you so much for joining us today on CNBC TV18. And there's been so much happening in multi-assets funds. The category is seeing big flows, and we've seen most of the categories doing well as well. So thanks a lot for the discussion today. Ihab, let me come to you first up, because multi-asset fund is the biggest one for you. The AUM is the biggest in the industry as well when it comes to multi-asset category. How do you split it in different asset classes? And is there a mandate to have a specific portion in a specific asset class?
Yeah, as the fund name suggests, we can invest in three or more asset classes. So for us, the asset classes which we've selected is equity as an asset class, debt as an asset class, and commodities, a broader commodity space as an asset class for us to invest in. So for us, it being an equity taxation fund, equity on a gross basis has a dominant allocation. So for us, equity on a gross basis can be between 65 to 80%. On the debt side, we need to have a minimum 10% because the category requires us to invest minimum 10% in each asset class. So for debt and commodities, it will be minimum 10%. But the higher end is restricted because we need to have on a gross basis 65% in equities. So for us, the multi-asset is predominantly an equity taxation product. So higher allocation is towards equity. But we can always toggle in between these three asset classes. Apart from that, we can also invest in REIT and InvIT, but that is over and above the three mandatory asset classes we've decided to invest in.
Okay, all right. So that explains it clearly. What does the breakup look like? And we'll discuss that in greater detail in just a bit as well. But Vishal, let me come to you, because there's been a big surge in new launches in the multi-asset category. Last year itself, there was a launch of 9 multi-asset allocation funds by different fund houses. Is this a recent shift and focus on this category, or it has been there for a while? And do you think that could continue as well?
Yeah, so I think it's definitely been this sort of transition that has happened. If you look at AUM growth itself, you would see that AUMs between March of 23 and March of 24 have gone up by a very substantial amount, from 27,000 crores all the way to about 67,000 crores. So it's up about 2.5 times. And one of the big triggers for this has been obviously a lot of those NFOs that have come in the last 1 year. And the reason why a lot of those NFOs actually came in was because of the fact that there was a change in taxation laws that came in at the end of March 23, whereby the way indexation benefits were available on debt, international, and gold sort of products underwent a significant shift. So we think that taxation has been a very, very big driver of this transition. And, obviously some of the fund houses have tried to, do some other innovation as well by trying to get lesser equity in as compared to some other funds, etc. But in general, we think a large part of the shift has actually come about through the taxation changes.
That's right. And that has been the case, as you pointed out helpfully in the table that you have shared with us as well. Multi-asset funds, they've seen net assets under management increase by 2.5 times from FY23 to FY24 itself. Ihab, let me come to you in that case and understand the fund manager's perspective. What are some of the factors that you consider while constructing a multi-asset fund? Is this allocation dynamic that changes with market cycles? How often can you change it?
See, for us, we have dedicated fund managers for each of the asset classes. So it's an independent thought process on each of the asset class. So whether we like it or don't like it. But having said that, like I mentioned earlier, it being predominantly led by equity on the gross basis. How attractive or not attractive equity is plays a significant role in terms of allocation to the rest of the two asset classes. For equity, the thought process which we've adopted is that we've used two ways of looking at it. One is valuation as a measurement of should we be invested in equities or not. And apart from that, one other additional factor which we've considered is where are we in the earnings cycle. So over the last, I would say, 3 years or so, we've been in earnings recovery cycle. So if the view is that going ahead, the earnings recovery cycle is we've achieved the recovery part of the earnings, and going ahead, if the earnings is in tune with what the nominal GDP or slightly higher than that, the growth would be. That also plays an impact on how we allocate to the equity portion. So for the rest of the two asset classes, though it is an absolute thought process on debt and gold, but it has a bearing on how we think about equity as well in terms of allocating to the rest of the two asset classes.
Okay, all right.
And to your point,
Yes, please go ahead.
dynamically managing the allocation, it is very dynamic in terms of there's no restriction on terms of time frame on as and when we can reallocate capital amongst these three asset classes. And as a fund house, we strongly believe in dynamically managing these three asset classes because through dynamically managing the asset classes, also we can try to generate alpha. Similarly, the way we try to generate alpha through sector rotation, stock selection, asset rotation can also be a source of alpha for this fund.
Okay, yeah, exactly. I was just going to follow up on that because considering the market cycles that we've seen, what does the allocation look like when cycles change as well? How dynamic could it be? Thanks for that. Let me come to you, Mr. Dhawan. So is it right to say in that case, an investor can only have multi-asset allocation fund in their portfolio? That would be enough? Or do you need other asset classes or other funds to diversify your investments?
So that's a great question because I think a lot of people think that this might be that one solution that can solve everything for me. I think there are 2-3 different angles to this to come to the right answer. Number one, different investors have different risk tolerances, and what could happen is, or they could also have different investment time horizons, their own sort of requirement of monies, depending on what they need it for and when they need it. And what ends up happening with a multi-asset fund is that multi-asset funds by themselves could be running portfolios differently. And there could be some of them which are equity tilted, like we just heard, or there could be funds which are more tilted towards, say, for example, debt, or they could be having some international exposure on the underlying level. So essentially, multi-asset funds itself are not a singular type of fund. And therefore, if the investor is more aggressive from a thought perspective or has a longer time horizon, he or she might find a multi-asset fund which has more equity works in his favor. Someone else might feel exactly the opposite. So clearly, you can't have just a multi-asset fund solving all these problems for you. Second is that from a manager diversification point of view as well, you ideally do want to have different styles, different managers to manage some of the risk for you. And therefore, I would typically say that for all investors who are looking at constructing good quality portfolios, they need to have between 5 and 7 schemes at least in their portfolio. And last but not the least, these managers could also be running different types of models at the underlying level. Some of them could be following sort of mathematical approach. Some of them could be more fundamentally led. Some of them could be finding trends that they follow. So there are all kinds of different permutations and combinations that managers are also using to get the best outcome. And therefore, we would definitely say that it's a good idea to, first of all, realize that multi-asset funds itself can be different from each other, then get one step lower and sort of deep dive into how that particular manager manages the fund, and then ensure that you have multiple managers who take care of your money rather than just a single manager.
Okay, take that point. It's very helpful because usually people think that there is already so much diversification in one fund, so why go for others? Mr. Dalwai, let me come to you. In that case, let's do some comparison. What are the benefits of multi-asset allocation funds versus, say, an aggressive hybrid equity counterpart? What has the return difference been so far, if you've seen major differences between these two categories?
See, aggressive hybrid, as the name suggests, would tend to have a higher equity allocation versus a multi-asset fund. And over the last, I would say, year or couple of years or 3 years, when we've seen equity as an asset class do well, obviously the aggressive hybrid category tends to do better than a multi-asset fund, which tries to diversify or reduce the risk quotient of the investor by diversifying across multiple asset classes. But I would still believe that on a risk-adjusted basis, multi-asset fund would be superior. Uh, and the point which I didn't mention earlier was that each of these asset classes have their own independent cycle and they perform differently in each of these cycles. So by diversifying into multiple asset classes, one is reducing the risk quotient significantly in a multi-asset fund. So I believe on a risk-adjusted basis, multi-asset fund would be superior to an aggressive hybrid fund. But over the last year, 2 or 3, when equity as an asset class has done well versus the other asset classes, aggressive hybrid fund on a return, purely on a return basis, would tend to do better than a multi-asset because of higher equity allocation.
I get that point, but we always have to look at risks as well, right? And that is something that all you fund managers and experts have always spoken about as well. Vishal, let me come to you. What's your take? How has the category performed vis-a-vis an aggressive equity portfolio? In the longer term, what does it look like?
So actually, exactly like it was being mentioned, right? There is clearly outperformance of the last year or so on aggressive hybrids because equities as an asset class has done really well. Though to be fair, gold has also had a very good 12 months on the back of certain drivers of gold prices as well. But essentially, they have outperformed in the near term the aggressive hybrids. While if you go to 3-year and 5-year data, you can actually see that multi-asset funds have actually done better. It's just that a lot of multi-asset funds are relatively newer because, like we discussed earlier on the show, a lot of the NFOs only came in the last 12 to 15 months, and therefore not a lot of long track records available there for us to look at. If you look at risk-adjusted returns as well, interestingly, aggressive hybrid funds in this shorter period of time have actually done better. But one will always want to look at the data with a little bit of a sort of pinch of salt because there aren't enough multi-asset funds which have long enough track records for you to look at risk-adjusted returns very carefully. So I think the way to think about this for investors is that, even though the data might show that risk reward has been better for aggressive hybrid funds in the more recent past, you would want to track this category very carefully to see whether this undergoes a change as the cycles for equity play out, and you either have a price correction or time correction that takes place in equities as well.
Point taken. That's right, because as you pointed out, a lot of these NFOs are not very, a lot of these funds at least are not that old as well. We'll track that closely, but for now, we'll have to slip into a short break. On the other side, we'll continue our discussion with our experts on all about investing in multi-asset funds. Stay tuned.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back. You're still tuned into MF Corner. We still have with us Ihab, Dalwai and Vishal, Dhawan, and we are discussing everything about investing in multi-asset funds. Vishal, let me start with you. We've spoken about diversification as, of course, being one of the major benefits of investing in this category. What are some of the other benefits that an investor can look at?
One of the big things which has caused the growth of this category is clearly the taxation element, especially when you combine these assets together. You could either have equity kind of taxation, which means that you get long-term tax benefits over a holding period of 1 year, and that tax rate is only at 10%. Or you could also have funds which have more than 35% in equity, so that they get indexation benefits that are available in spite of the changes that happened in March 23. So I think one big reason is, of course, tax. The second is that whenever you try to move monies between asset classes and you have to rebalance portfolios, there are decisions that you have to make. And those decisions are not easy for people who are not professionals. I think fund managers, with all the data that they have access to, could actually be able to make those decisions on a far more robust basis the data quality that they have. And therefore, you also get the benefit of being able to rebalance with far more expertise as compared to trying to do it yourself. And the third is that every time you make these changes, you don't necessarily have to, also incur costs, because whatever changes happening within the portfolio do not incur a tax for you until you decide to actually exit something. So clearly, there are advantages of using multi-asset funds. I think what one may want to look at, though, is that, are there also other categories that can give you some of these benefits? So, for example, balanced advantage funds or dynamic asset allocation funds have also become very popular over the last few years. And there has been money flowing in there as well, though clearly not as much as multi-asset funds have got. Now, those are actually just using equity and debt and moving dynamically between them. And therefore, what ends up happening is, as an investor, you could also be deciding, saying, do I want to have a balanced advantage fund which does this sort of movement efficiently, gives equity taxation, does not incur a cost when I shift between asset classes, or would I prefer a multi-asset fund because I also want that third asset class in my portfolio, which could be gold, or it could be gold and silver, or it could be international equities as well.
All right, we take that point, Vishal. Ihab, let me come to you. Wanted your thoughts on REITs and InvITs as well. You did mention that that could be one category where investments can be made. How do you look at this asset class currently? And do you think this should be a part of everyone's portfolio for sure? We've spoken a lot about interest rates possibly getting cut. How does that put this asset class into the picture?
No, rightly said. It looks like a very attractive asset class today because it offers a combination of yield plus growth. And from a valuation perspective, also it's not reflecting the equity type valuation. It is available at an attractive valuation as well. The only issue currently is that there aren't too many REITs and InvITs available in the market today. So from an institutional perspective, to make it a large part of an institutional portfolio. Today, it is a bit of a challenge, but as and when this segment grows and more companies or they start listing in this segment, I think it is a very interesting asset class. And another point is that it is a very efficient, I think the institutional setup is a very efficient method of owning this asset class versus doing it individually. So from an institutional perspective, it makes more sense to own it in a portfolio today.
Yes, there has been a lot of conversation, some changes made with respect to tax as well in the finance bill last year, and now the Desh bill as well, getting that clarity. One more question, Mr. Dalwai, I wanted to understand the international exposure, because we've spoken about a lot of other markets, US doing well. How much should that be in any investor's portfolio? And which markets are you liking in the international space if we compare it with India?
See, frankly, for our multi-asset fund, currently we've restricted ourselves, or we've focused on these 3 or 4 asset classes, which is equity, debt, commodities, and within commodities, be it gold, silver, and few other commodities, and to some extent, REIT and WIT. International exposure is very insignificant today in the portfolio, partly because there isn't much headroom to increase international exposure in the portfolio as well. So as and when there is space to add on to international exposure, we will add on to this portfolio as well. But currently, we're just focusing on these 3 to 4 asset classes, which I mentioned about.
Okay, all right. Vishal, let me come to you. Would request you to keep this answer a little brief. We are just towards the end of the show. But is it a good idea to take exposure to gold via multi-asset funds, or do you think an investor will still need to go via the SGB, the sovereign gold bonds, or the gold ETF route?
So I think if investors are in a higher tax bracket and they're okay with the relative liquidity of the sovereign gold bond over that 8-year holding period that it comes with, then that's definitely an option that can be considered. I think it works well for a lot of those investors. Also, if they want to buy gradually, through an SIP, STP sort of model, worried about valuation on gold and silver as well, because they are at high prices, a gold ETF or a gold fund could also be used. So I think investors have the choice. Either they buy it through a basket of a multi-asset fund, or they go and buy it purely through a sovereign gold bond or a gold fund or an ETF.
Okay, all right. Thank you so much for that, Vishal. And we have a lot more questions, but we are out of time today. So, gentlemen, thank you so much for joining us today and giving us all your insights into what multi-asset allocation fund looks like and how one can go about investing in that as well. Thank you so much for joining us.
Thank you. Pleasure.
Okay, with that, let's quickly take a look at the top 10 multi-asset funds AUM-wise as well. We were speaking about ICICI Pru, and that is the biggest one here with an AUM of 41,159 crore rupees, followed by Kotak, there's SBI, Aditya Birla Sun Life, there's Nippon as well at 3,314 crore rupees. So after 41,000, there's a smaller one actually at 6,000 crore rupees. And then we have the likes of UTI Multi-Asset, Sundaram Multi-Finance, Quantirect, all of them anywhere between 2,000 crore rupees to 2,897 crore rupees. So these are the top 10 multi-asset funds in the country as far as the AUM is concerned. With that, we'll do one thing. We'll take your leave on this edition of MF Corner today. Thank you so much for joining us. Stay tuned for Closing Bell to take you through the last hour of trade.